So we have Bitcoin trading just over $100,000. That was following the move that we had yesterday, but still in a very low volume environment. So in today's show, we are going to have a look at where Bitcoin is most likely to go next over the short, the medium, and the high time frame. We'll evaluate where Bitcoin is in terms of the Wall Street cheat sheet and how much longer we have left within this particular crypto cycle. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get the show on the road. You can see a very, very differing picture compared to what we have in terms of the fear and greed index for Bitcoin, because the stock market's putting in extreme fear, right? Still in the, well, not extreme fear, but fear. For the stock market over there, sitting at 37. A couple of weeks ago, it was at extreme fear. We'll have a look at the stock market because there are also some major economic events that are coming up this week, which we, of course, do need to be paying attention to. If we do look at the crypto forex factory index over here, or at least in terms of the calendar, you can see Friday does hold a lot of major high impact events, that being the US unemployment rate, which currently in terms of the forecast is expected to come in at 4.2%. Now, this will have an impact on where crypto does go next. So it is an important thing to be looking at least in terms of what Bitcoin is going to do around this date. I've laid out the expectations of what could happen in the Whale Room Discord. For any of you that are already in there, you would have already seen it. But ultimately, looking at that US unemployment data coming out, if it does, of course, come out below 4.2%, then expect Bitcoin could make its next move up to about $120,000. If it comes out between 4.2 and 4.3%, expect that we continue to move in that range-bound environment, with your range lows on the daily at $85,000 and the range highs where price has been capped at $110,000. I said also, if we do actually see that coming out as expected, which is the most likely outcome, by the way, because most of the time there aren't too many surprises when it comes to this, it's expected to come out at 4.2%. So if it does and Bitcoin continues to chop, that might create the environment where we start to see a breakdown of Bitcoin dominance and likely a move into the altcoin sector, which we spoke a lot about yesterday, right? Q1 of 2025 is typically the best performing time specifically for Ethereum, and Ethereum is the largest blue cap. If it does run, it will signal risk on for the rest of the altcoin sector, right? However, if we do see prices come in above 4.3%, of course, that's going to be a bit of a shock to the system, and immediately you're going to see a correction being priced in straight after that comes out, and then we have to look to lower prices, which we can evaluate at a later date. Now, there's only one thing in the crypto charts that are presenting the possibility that the unemployment data is going to come in above 4.3% and shock the market, and that is that massive bearish divergence that we're seeing on the weekly time frame with the presence of low volume. We'll talk about that in a moment's time. But as it currently stands, well, that's what we're looking at over there. Let's go back to the stock markets, which we haven't looked at since last year. What you can see over here is, of course, we have lost the top side of that rising wedge, which is typically a bearish chart pattern. But remember, the trend is your friend till the end, and horizontals are more important than diagonals when it comes to trading. And if we do look at this, it did find major support at those diagonals. The problem is, when you zoom in and you actually have a look at the S&P 500 over here, you are putting in lower lows and lower high structure, which creates the opportunity where you might start to see the S&P 500 roll over. And we know that if the stock market does struggle, typically that would present a challenging time for Bitcoin, which is why it's really, really important that we pay attention to where we are psychologically on the charts right now, and as well as paying attention to the low volume and the bearish divergence. Now, I'm not trying to get too bearish on you guys over here. It's just that if we do see Bitcoin putting in a massive rally towards that $120,000 region, that may be a very, very serious profit-taking zone because of what we're seeing in the stock market, and especially so if we start to see that occur off of a continued low volume within specifically the crypto market. So may mean a deeper reset. I'll show you my thoughts of how that could potentially play out on the daily time frame. Stay tuned until the end of the show. All right, if we look at the NASDAQ over here, QQQ, same thing over here, putting in those lower candle closes, lower highs over there, breaking that structure of the upsloping trend line over here, or the rising wedge formation, which is typically a bearish chart pattern. You do have major support on all the stock markets in the form of the 200-day moving average, which is rising towards the upside. You can see it over here as well on the Dow Jones Industrial Average. So it just may mean a deeper correction, find some support, reset the markets over there, and then at a later stage, continue on towards the upside, right? So we're watching that over there. Coinbase over here is still in a very, very decent zone. If you do look at Coinbase, remember you had the huge cup and handle formation coming right into that super key support over there. And theoretically, you have a very nice invalidation. I will zoom in on this chart over here just to show you your invalidation would theoretically be below yesterday's low, right? So invalidation below yesterday's low, as long as this candle doesn't break back below that candle over there, which is going to be 246, you could therefore have a stop loss. I'd probably go just below the 200-week moving average for safety. But if you want a tight stop, below yesterday's low should be good enough. And that would be essentially your entry points on a long trade on Coinbase. For those of you who want that exposure to the broader altcoin sector without trying to pick a needle in a haystack amongst over 5 million different crypto coins that have been launched over the last 10 years or so, well, Coinbase is a good pick and shovels play that you can be looking at, right? So keep an eye out on that one over there. If you do want to trade any of these assets, by the way, you have crypto stocks, commodities, forex pairs, the whole bang shoot. You can do that over here, of course, on Prime XBT. So we have the gold chart over there. We have S&P 500 on the right-hand side, and they are giving you a massive sign-up bonus, right? 20% sign-up bonus. So if you put in $10,000, they'll give you $2,000 for free, right? That you can use if you're putting less money in, right? $1,000, well, you get $200 for free to trade with, or you can opt for the discount on trading commissions over time. Now, moving into crypto, where's crypto at? Where are we cyclically? How far have we still got to go? This is actually a topic that's starting to trend across crypto, Twitter, or X, as well as YouTube. A lot of people keep trying to time the top of the crypto cycle, and a lot of people believe that it's going to be happening this year. You can actually vote in the comment section. Let me know in the comment section over there. Vote over there on the poll. When do you think we top? And also let me know where you think we are in terms of the Wall Street cheat sheet, which we'll pull up in just a moment. Now, if you do look at the banter bubbles over here, at least on the hourly, there is some support that's being found. Early on this morning, at least my time, which was a couple of hours ago, a lot of these coins were red. You are starting to see a bit of a bounce over here. Virtuals is still slightly down. We've been speaking a lot about the AI agents. We'll touch on that again today. 𝗖𝗢𝗕𝗓 back up, right? Looking really, really strong over there. We spoke about the barbell approach yesterday, where you would have 𝗖𝗢𝗕𝗓 and virtuals as your anchors, right, to the AI sector portfolio if you want AI agents. And today we'll be talking about the plates, right, the extras that you can add on in terms of the AI agents. Stay tuned until the very, very end, and we'll speak about that. First, we need to identify where are we within this Wall Street cheat sheet, right? Because we have a very different picture when it comes to the fear and greed index on the stock market in fear. But when you go through over here to the fear and greed index in crypto, well, according to this, we're sitting in greed, right, at a 78. So the question remains, where are we within this? Now, I think that it's, of course, going to be one of four. It's going to be anywhere between belief, thrill, euphoria, and complacency. Remember to focus on what people say and think at these various different levels. Belief, according to the Wall Street cheat sheet, would be time to get fully invested, right? This is the part of the cycle where people think, time to get fully invested. Thrill, I'll buy more on margin. I got to tell everyone to buy. And then we have euphoria, I'm a genius. We're going to be so rich. That's usually the part where you start to look up Ferraris, Lamborghinis, things like that, thinking about which color car you're going to be getting next, right? And complacency, we just need to cool off for the next rally. You let me know, where do you think we are? Vote in the poll section over there. Although the sentiment, at least to me, does probably, line up a little bit more with complacency. I definitely don't believe that we're over there. I think in terms of the cyclical behavior of where the chart is, we most likely somewhere around here, around thrill, right? We've just come off of the holiday season. There is a low volume environment, so people may not be feeling that yet. But mark my words, if you see just a small amount of volume that comes back into the market within a couple of days, you will immediately have the emotions back in the thrill zone over there. And then very, very quickly, you lead into the euphoria phase. So that's my personal opinion. You can vote. Let's see where the majority of the votes lie. Let's click over there. So it seems like most of you, 54% of you, have voted for belief. You believe that we are in the belief phase, which would mean that you still think there is a lot of time left, right? So we'll see. Time will tell. One thing I can tell you for certain is that we can look at actual data and metrics on chain, as well as from the crypto exchanges. And what we can see based on this is that the open interest actually did recently just tick up, right? It moved towards the upside over there. You got a big spike as of yesterday, right? Between yesterday and today, we started to spike up in terms of open interest, which is very, very interesting. And the reason that it's interesting is because we're in this low volume environment and the leverage has been totally flushed, right? There's apathy and a lack of interest within the markets. Now, oftentimes when you see this big buildup in open interest, it means one of two things. We're either about to start the next phase of the trending move for Bitcoin, which we'll talk about the levels in a minute, or it's setting in a bull trap where you're going to get flushed down one more time, taking out at least the early buyers that are starting to build those positions. So we will pay attention to this as time unfolds. Yesterday, we looked at the significance of price being above the stop and reversal indicator, as well as above the 21 weekly exponential moving average. And we said that as long as we continue to hold up above last week's candle low for Bitcoin, then there is a higher chance that this is putting in a major higher low. Volume will slowly start to trickle back into the market as people go back to work over the course of this week and next week. And then you should start to see business as usual and the volume increase, right? But according to this, fear and greed is at 78, right? It is suggesting that things are frothy, but I think that there's a little bit of a conflicting the data between this. I've always been skeptical of this crypto fear and greed index. I'm not really sure exactly where they're pulling all this information from because sentiment-wise, I would say that it feels to me like we're closer towards neutral, especially the people that I speak to that are in crypto full-time. That apathy, we have seen that apathy. But nevertheless, when you do look at the trending moves, understand that those strong trending moves do typically occur around that greed zone, right? Between 70 and 80 is where we start to see the fast moves. If you put on 80 to 90 and 90 to 100, well, this is where your parabolic advancements do take place. So if we do see Bitcoin taking out the prior highs around that, the key levels above head over here at about that $108,000, and we have newfound volume coming into the market, then I guess, maybe this was correct. And we've just been holding around that region over there, resetting at least the market ever so slightly before moving up into that next huge trending move, which we're waiting for, similar to what we saw in 2021. Now, it's important to understand that as it currently stands within the market, it's really unlikely that we're going to see the same type of move as 2021 for two different reasons, right? Number one, it's never been easier to create a crypto, which means that, throwing a dart at a board like we could in 2017 and 2021, and every single crypto went up, is not necessarily going to be the same case because it's never been easier. People can use prompts from ChatGPT to literally launch a meme coin, right? You can literally just speak to it and say, develop the contract address for me. Okay, launch the coin. And using AI, it's never been easier. You can make it create a profile picture for you. You can make it using AI agents, run the Twitter page for you and create a community. It does absolutely everything. So I think it's very unlikely that you're going to see every single crypto within this cycle rally towards the upside within the bull market, which means you have to be very selective about which coins you're choosing. The other important thing to denote over here is this was coming off of a worldwide shutdown, of course, the C word, and consequently, they printed money like never seen before. Now, that could still happen again, but it hasn't yet, right? We haven't seen anything like that yet. If they do print money in the same type of way, then you should see something like this once again. At the end of the day, we should see some form of quantitative easing, and that's all putting the puzzle pieces together, following what happens with the unemployment rate coming out on Friday. And then later on in January, we're going to be having the next FOMC meeting, which is usually the main determinant terminating factor, right? Let's just quickly go through to next week. CPI, there we have it. So CPI coming out on the 15th of January. And let's look at the entire month over here, what we have in terms of important events that are coming up. We have the FOMC statement on the 29th of January. So right at the end of the month, we're going to have the FOMC statement. That is going to be the most important thing in terms of determining that potential pivot into quantitative easing, which is the money printing time frame, right? That's when they start to print money and everything does go up, right? So if we look at this over here, well, we do have the bearish divergence, right? We've spoken about this before, similar to 2021. Let's keep an eye on this. I would definitely be very, very cautious as prices do move up into this region over here, depending on when it hits this trend line over here. Whenever you hit this trend line, we need to reevaluate, have you broken through this level and invalidated the bearish divergence? If so, then everything is fine. It's business as usual, trend continuation. But if not, if you start to see another rejection from, of course, that RSI, while simultaneously prices rejecting from the top side over here, whether that be at 110,000 or later on coming in at around 120,000, that would be a major profit-taking zone, right? So keep an eye on that. That is the one warning factor in terms of the cycles and where we're at. Well, we're tracking exactly according to how we did in the prior cycles, right? You can see it's literally sticking to we're in the purple line right now. The purple is sticking to the green and the orange line like glue, right? It's been following. Sometimes it overextends slightly. Other times it drops slightly below. But if you had to put this as an average or moving average, it's basically tracking exactly like we saw in the prior cycles. And if the cycle is to repeat like the other cycles did, and we do get some sort of quantitative easing shift around the end of January announced by the Federal Reserve, well, that could lead to the next big move up, right? Which is from here, ending all the way the cycle around 1,068 days, right? Between 1,060 and 1,068 days. However, I would definitely expect that there should be some major correction in between before you do actually see something like that. So this is just pure speculation, just to be clear, pure speculation. This is not a financial call that you should be following with the farm. But essentially, what I would like to see is probably something like this, right? Just a slow grind up over here throughout January into February and continuation up, anywhere around that $125,000 mark is what I'm looking for, probably sometime into the end of February, beginning of March. And then you might start to put in a correction that leads into May. And everyone will say, you see that happened again, sell in May and go away. I should have just sold. And then you put in some sort of reaccumulation and then continue on. And maybe at that point, Bitcoin does actually reach those insane targets that people have of $150,000, $200,000, $250,000. But timing wise, we're looking at that important 160 bars from the cycle bottom to where the cycle actually peaks. And at that point, we've been through this multiple times, right? Oscillating between, hope, optimism, belief, and thrill multiple times, resetting, and then finally finishing off with that extreme euphoria, at which point we've reached the timing target, which would be October to November 2025 this year. And that would be the end of the cycle. And for those of you asking, when alt season? Well, that would be when alt season, right? You would then therefore experience a bit of an alt season in this first bit over here. Alts will get heavily wrecked in that part over there. And then you would experience the behemoth alt season, the major alt season in the last leg up. This is under the presumption, and again, very, very extreme speculation, that we follow the cycle exactly like we did in the prior cycles, right? So far, that has been the case. And I'm willing to adjust the timing factors based on how quickly we rally towards the upside, right? For example, if we throw in cycle 2, what you can see over here based on cycle 2, so let's maybe just remove the other two cycles, cycle 3 and 4, and we focus on the purple. You can see this has been very, very lackluster compared to what cycle 2 was. If this cycle was following along how cycle 2 was, well, what you would expect then is you would have expected a vertical rally at some point. So if we do suddenly just start to put in a vertical rally over the next 60 to 90 days, I'll definitely be a seller, right? But I'll update you then. I think that it's the less likely outcome. But if it does start to happen and we start to put in a massive move like this, well, maybe then the end of the cycle is actually coming early. But as it currently stands, I think everything is on track to finish as per the usual, right? Looking at Bitcoin on the daily time frame over here, you can see price is, of course, above that key pivot level, that being the yellow line that I've highlighted over here. That is your RSI. At least as long as price is above that, your RSI trends towards the upside, and we will see continued strength from the bulls, right? Bulls will attempt to take control over here. You are getting a little bit of a pullback on the low time frames. I did update the Whale Room Discord. There is a bit of a pullback into the fair value gap on the 4-hour time frame that you can watch out for. That's going to be at about $100,500. If you see that $100,500 level finding support, you know your fair value gap has been filled. That's an inefficiency candle, a large abnormal candle. Price often comes back to test some of that, and then later on you will have continuation, right? Just a quick word on Whale Room, because I got a lot of requests. Many of you were asking over the vacation period if you could join. I was getting DMs on Instagram and X and all over the place. There was a waiting list. We have let you in, right? So if you're on the waiting list, you have been accepted. You should be in Whale Room as of, I think, yesterday. And for any of you out there that do also want to jump in, there's a link in the description below. So we have removed the waiting list for now. We just need to monitor the inflow of people. We don't want it to get too chaotic, and we want to keep it pretty exclusive in there. But if you do want to join, there it is. Click on the link over there to Whale Room. The waiting list has been lifted for you. All right, let's continue on over there. So price above the 9 and 18 exponential. So far, bulls in control in terms of the trend. Looking at the EMAs and the MAs, everything in that sense looks fine. Now, remember, we're talking to different people on different time frames. That was your high time frame analysis, your at least your medium to high time frame. Again, in the short term, in the lower time frame, yes, you could come down to about 100,500, and you need to look for major support to be found over there. Remember also, price action when there is a low volume environment tends to move towards the area where liquidity is the greatest. What is liquidity? Liquidity is where the highest number of orders are placed, whether that be in the form of a limit buy order or a limit sell order or stop loss, which would be overhead or below price, depending on whether the market participants are long or short. Now, what you can currently see is that the highest liquidity area is currently at $103,000, right? This is when you have a look back period over 48 hours. This is where the majority of the orders are, which means that there are some people that are taking hedge shorts, right? Whenever you see something like that, it always creates the possibility that you'll get a short squeeze. The real question is what happens after the short squeeze. So if you get a bit of a short squeeze and price does actually spike up towards this region over here, $103,000, and then you get a candle where it closes below and you've just left with the wick above. And I wish I could draw on this chart over here. So candle spikes above, let's say it goes to about $105,000, but then the candle comes back down and closes below that $103,000 mark. That would be a liquidity grab, a swing failure pattern, and that would be the zone where it warrants a hedge short trade, right? Then you put the short trade on the table and you look for the next side, and you take, you put your stop loss slightly above where those guys got trapped, right? I don't think that's anything to worry about yet. This is more a reactive thing that you need to look at. You need to watch as price spikes into that region, right? In terms of the USDT market cap, I can't emphasize enough how this is probably one of the most important charts that you do need to be looking at over here, because it's range bound, right? And we spoke about this when it happened at the time. We said everyone better be praying that that was a massive bull trap. And so far, it looks to have been the case, right? This is an example of that swing failure pattern, right? You have your range high. So similar to what I'm explaining over here, you have your range high in terms of the trading range and where the liquidity resides. Price spikes up over there, fails, and immediately comes back down, closing back into the trading range. That is your swing failure pattern. Now, what you typically see many times is you often sweep one side and then the other side, right? So you sweep one side, and then if you do sweep this side, this is why I say you must pay attention over the coming days and weeks, right? Pay a lot of attention, because if you start to see Bitcoin pushing up towards those zones that are outlined, so let's go back to the bearish divergence chart. Let's say, for example, Bitcoin is pushing up wherever it may be and hits that trend line. Let's say it's 111,000. Maybe it's a little bit later on, it's 115. Maybe it's further on and it's 120. 120 would be key for me, right? Let's say it hits $120,000. You go back to this chart. If this chart is doing this, dropping support, and then starts to deviate back above, while simultaneously you have that $120,000 level tag with the presence of the bearish divergence, then it may just mean that this correction that I'm looking for may be coming sooner, right? That means you moved up very quick. You may tag that target in January, February, and then you may go in for a deeper correction before reloading with a macro high low into the end of the cycle, right? So these are the things you need to pay attention to. Remember, trading is mapping out various different plans where you say, well, you know, if this happens, this is what I'm going to do. I'm going to do that, and I'm going to look for correction. If, you know, it moves up slowly and gradually, then this is my expectation. That's what I'm going to be looking for. If it does this, this is my next plan. It's if this, then that scenario is just like you plug into an Excel formula. That is what trading is, and then you make your adjustments accordingly. So as it currently stands, USDT dominance is 100% range bound. You can see caught between the two levels over there. There isn't much you can do in terms of a trend trade until such time as it breaks and holds below that 3.79% level, rejecting that and going down hard. If we do, that's where you get the parabolic, absolutely insane bull runs. And that could lead to something like this, right? That's where you could start to get, like cycle 2, this massive move towards the upside. But I so far think it's very, very unlikely. The alternative is if it breaks and holds above here, you know, then we're in big trouble. But I think in order for Bitcoin to put in a confirmed major top or even a potential cycle top, there should at least be something like this, right? Deviation like that back into the trading range. So we should sweep this liquidity, which you have between at least 3.73 and 3.8. So we should drop that level at the very, very least. So we'll keep an eye on that. A lot of important things to be watching over here. Really, really focus on the charts over the coming days, weeks, and months, right? We have a big range-bound environment as well on the BTC dominance. Now, the reason that even if we were to put in a major top, I don't believe that it's the end of the cycle per se, has got a lot to do with this chart, right? We've spoken about this before. I'm not going to bring up the yearly chart once again. Go back to yesterday's video if you want to see that. But we spoke about the significance of 2025 being the post-halving year, which is typically the year where you see Bitcoin dominance break down in a massive way and the altcoin sector rally in a massive way, and markets tend to top on extreme greed. And extreme greed can often be seen by the moves occurring within the altcoin sector. Money becomes dumber and dumber and less caring the greedier it gets, right? I remember in the previous cycle, I bought, I can't even remember the name of the tokens. I think it was something like the Greek god names, like Alpha, Omega, Gamma, Beta or something. And it was a cube that they were going to, I knew this was absolute BS, just so you guys know, but they were supposedly going to shoot this cube up into space. And you're purchasing advertising rights by owning each of those tokens with a very limited supply. This is the type of signs and symptoms, you know, that you're looking for with the cycle tops, right? So they're going to shoot this cube up into space, and no matter where you are in the world, if they decide to turn it on and at least ambush market you with Coca-Cola ads or McDonald's ads, well, it's going to be in the sky. You can't escape it, right? This was at least the story that they were telling. So this is the type of environment that you tend to see the market cycles top in. And that's at least one thing that would give me confidence that we're nowhere near that, and that most likely we're following very, very similar to what we saw in the price cycles, which was cycle 3 and 4. And it's probably going to be a more long-ended cycle, right, where we see something like this. So even if we do put in the big correction, just understand, you know, because Bitcoin dominance hasn't dropped heavily, we still probably have a long way to go. This is also range bound. We want to see acceptance now gained, specifically below that area over there in the blue box. We want to see acceptance gained, price holding and failing to get back above that 58% level, right? Because that is what you call acceptance underneath the mid-range, and acceptance under the mid-range means we target down towards the range low. You're looking for that, and then a deeper breakdown below the bottom of the range low, and that's where we should see some really, really nice moves within the altcoin sector. So we'll speak about some of those. We'll look at some of the AI agent coins that you can be looking for as well. You can see leverage has been totally flushed. So I definitely don't think that, you know, the altcoin sector is top per se. We can look over the last year. And if you look at the yearly, remember, it's the yellows that you're looking for, right? If we just pull this across over here. So the environment where we've put in most of the major local tops has been where people were paying above 60%, 60 to 200% per year to hold those positions open. As it currently stands, well, they've been paying next to nothing, below 60% per year to hold these positions open, right? So I see Gary says, yes, very confusing conditions. I think this is how many traders feel right now, 100%. All you need to do is just sit on your hands if you have good positions established and wait for confirmations, wait for volume to come back into the market. If you're a low time frame leverage trader, it's probably the environment where you probably just sit out, right? Just wait for volume to come back in and have a more at least confident analysis of where things are going next. Right now, it's a choppy environment, right? Choppy environment. So we can look at some of the altcoins. Let's have a look. I try to put some of the ones that are most significant in order over here. Just quickly looking back at ETH, you guys know it. ETH needs to get above 3,900. So let's call it $4,000. Hold that level, and then you should see a very quick move up to about almost $6,000, right? Then you're looking at about a 47% move on ETH. If you look at Solana over here, I wouldn't be surprised to see a pullback on Solana, especially if the low volume continues, pulling back into about 205, maybe get a couple of weeks down just below $200 over there. I think that would be a solid zone to start to load up on Solana before the next major move up, right? I did also want to mention this about Solana. This is from Dan Smith. He says, if you look at rev equals fees and tips paid to transact with, measuring transaction demand and value. And then he says, here is the weekly update, right? So if you're looking at the weekly updates in terms of what Solana has done, long story short, it's the highest quantifiable demand for block space compared to any other blockchain that's out there. And in terms of market cap, it's below XRP and BNB. So as Mert says, do with that market asymmetry what you will, right? And what you should do with that, because this is the place where I try to help spoon feed newbies, which is, it's fine, it's no problem. What you should do with that is essentially it's a buy, right? It tells you that it's a buy. It either means that XRP and BNB are a hard sell, or Solana is a hard buy, right? That is, you want to take asymmetrical bets, and this is an asymmetrical bet. Solana is a great bet. So that would be the levels, lining it up with the technicals. If you get any sweep below $200 and you immediately start to see a reclaim back above 205, you have your trade. Your trade's on the table over there. We can look at Hype. Hype obviously was one that was absolutely pumping at one point. A lot of you wanted your dip on Hype. There is your dip, right? That was your dip on Hype. You can see over here, came perfectly down, hit that trend line over there. You've broken the downsloping trend line, and now you're slowly starting to climb, right? So invalidation below the lows. You can, of course, time your entry on the low time frame. Use things like the 4 hour, look for the next pullback into the high low, and that is a good opportunity over there on Hype. If we look at an injective over here, we spoke about injective yesterday, holding the mid-range. It's starting to really push over here. Let's just see the momentum oscillators. Money flows increasing towards the upside. It looks decent. I wouldn't necessarily long it blindly right over here. Either wait for a pullback into just under $24, 24.3 around there. And then the next move up, confirmation of the breakout is going to occur above $31, right? Another one to look at over here is Aptos. You can see momentum oscillator just started to turn up over here. We have the money flow increasing and it's starting to turn a corner. So keep an eye out on Aptos. You might see something like this, right? You got your mid-range, which is coming up over here at about 11.30. Maybe you get a small rejection, put in that W formation, high-low. You can buy the high-low. Stop loss goes below here. Wait and hold multiple candles above $11.50, and then you can start to trade this up to about 20. So I don't think Aptos is too bad, right? If you look at NIA, let's quickly line this up over here. We did look at NIA yesterday. So breaking and holding above those key levels. This was the resistance zones that we previously saw. It is kind of in the middle of no man's land, but if you happen to purchase it into the 50% level, which we did identify, we spoke about the significance of coming into that key 50% level of that trading range, well, then you can continue to hold, right? So if you are looking for a position, expect a bit of chop, right? Expect a bit of chop, maybe something like that. Put in a more structurally sound high-low over there. This would be it. And then you can look for your next entry over there. Okay. Say, how's Say doing? Say still holding up. It did eventually tag that fair value gap that we had our eye on for a long period of time. This would theoretically be where, you're looking for your next high low. So low, high low, high low, and this is your next major high low. So maybe you just get one more down into about 42 over there, and then you're looking for the move up on, say, confirmation of the breakout is reclaiming back above 60 cents. Okay, 𝗬𝗓, let's have a look at 𝗬𝗓. So 𝗬𝗓 is still looking very, very strong. Massive higher lows and higher highs, but it can still do this, right? You can still see a move down to about 450 around that region, and that's just ultimately going to be your next high low. Okay. What else? What else have we got? Casper, we spoke about this yesterday. 𝗏, not much to mention on 𝗏 over here. Look, you still have your fib extensions on these. This is your trend-based fib extension, so taken from the low, riding the trend up to the high, back down to the low. If this is the confirmed ultimate low for the 𝗏 move, well, you got your 1.618 fib extension coming all the way up at 1455, right? So these are potential targets for later on within the bull cycle. That's 156% move. Remember, you want to buy these things when nobody else is looking at it, when they've forgotten about it, and it still has strong tech, right? Which I do believe that 𝗏 does. Phantom, well, we spoke about Phantom rejecting off that key level yesterday. It's completely dependent on what Bitcoin does. But if Phantom cannot reclaim back above 86 cents over here, theoretically, that's your invalidation. So if you were in a short trade on Phantom, it would look something like this. Essentially, you invalidate, which means the short trade idea fails, and you can essentially go back long if it gets back above 87 cents over there, and you'd be targeting down to about this zone over here, which is 57 cents, right? That is your range quarterly. We spoke about the significance of breaking that upsloping trend line. If you do, this can easily come back down into the range quarterly. That's probably then where your next opportunity comes in play. If you are looking for Phantom, which is now, of course, rebranded to Sonic, and you want to hold that for the long term, that would be something that I'd be looking at over there. Okay, let's just see. I think I had Optimism as well. Or was it, let's see, it was Metas. I think it was Metas. There we have it. Yesterday, we also spoke about the cup and handle formations that you're seeing across the board, which typically originate off of a falling wedge. At least when I say typically, I mean within this crypto cycle, you have these falling wedges. They don't have the massive breakouts that we initially look for, but instead they kind of just roll around, right? But slowly they grind up. So do keep an eye on that. That is Metas. It is a layer 2, right? Okay, we can take a couple of chart requests as well. Feel free, drop your chart requests in the comment section. I am keeping an eye out on that, and we can bring some of those up. Let's go to, I know there's a lot of hype and attention on the, of course, the AI agent. So let's go to virtuals and see how virtuals is looking very, very quickly. Okay, virtuals putting in the pullback. To be honest, I'm not that surprised, because I think that in terms of attention, I'm just going to put it out there. This AI agent narrative has hit peak attention in my opinion, right? So go back to this. Where is the AI agent sector in terms of attention? I'm not necessarily saying price, but most of the time price is going to correlate to attention. In my opinion, it's right here. It's anywhere between in between. It's above Thrill. It's way above Thrill. It's in between Thrill and Euphoria, or it's already hit Euphoria, and it may even be coming into complacency. That's my personal opinion. That's where I think that the AI agents are right now. So do not be surprised if you see an absolutely monumental pullback on these, right? You got this huge upsloping trend line over here. If you do start to break these things on like virtual. So by the way, if you are long on these, literally all that you need to do is basically just trail your stop loss. So some key levels to be looking at for major pullbacks. First area of interest, if it breaks that trend line over there, is $1.99. Next area of interest that I'd be looking at is going to be over here at about $3. I think that virtuals could very, very easily come back to $3. So again, lining it up with this chart over here, let's just say that you're between Thrill and you've put in the Euphoria, right? Let's say that candle is the Euphoria. Before you get complacency, what you'd probably see is this, right? Then you'd see the bounce and the lower high. That would be your complacency, and then you're going to go down, right? So I don't mean to, I see Jackie says I'm already in anxiety. I don't mean to give you guys anxiety. I mean, I'm just saying the charts or reading the charts exactly as I see them. At the end of the day, for virtuals, this has been a huge move. We'll look at AI16Z as well, but this has been an absolutely massive move. So I think, I wouldn't buy it here. I would only buy it if I saw this, right? If I saw this, hits this level, $3, you can start to buy, stop loss goes below, ride it up. If it starts to put in a lower high, trail your stop loss, bail out the position, and then maybe you were a late buyer. So that is for virtuals. Next up, let's have a look at the next one, which was 𝗖𝗢𝗓𝗔𝗕𝗟𝗘, which I have all the way on the bottom over here. So here's 𝗖𝗢𝗓𝗔𝗕𝗍. I did drop these, by the way. When we originally wrote about these, it was over here. It was on the 28th of November, which was all the way down here. This has, of course, had a massive move. Now, 𝗖𝗢𝗓𝗔𝗍, I said, I'll tell you exactly as I see it. Looks a little bit better, right? It looks better than virtuals. Virtuals looks like it's due for a major pullback. This has been putting in clear higher highs and higher lows. And there is your obvious area of interest, right? So possible if it does put in a range-bound environment, you want to accumulate this as close to the range lows as possible, which would be $1.74. So DCAing in between these two zones, between $2.40 and down to $2.75 is probably not bad. Let's zoom in over here and just have a closer look. So if it's going to continue, the thing is, I don't necessarily think it's going to continue a strong trending move immediately. And the reason why is you can just see if this is what the strong trending move looks like, right? Straight, immediate high lows, and price just rallies, right? In that instance, therefore, that should have been the next high low, and it should have just continued to rally up. But instead, it didn't, right? It broke that down. It came to this zone over here. Therefore, you probably have this as your range high. Therefore, you can look to the mid-range, which is going to be about $2 around here, $2. Look for a little bit of support. If it doesn't hold that as support, then yes, expect it's coming down to range low. Then you can look for your entry over there, and then it should move up, right? Give it a bit of time, chop between, reclaim the top side of the trading range at 244, and then this one can run up from that point in time. And if it doesn't, well, acceptance gain below here means distribution, and then you have to look towards some of those lower levels, right? So that is on the 4-hourly time frame, of course, for 𝗖𝗢𝗓𝗔𝗕𝗍. Now, I did say that we gave you the barbell approach, virtuals, 𝗖𝗢𝗓𝗔𝗕𝗍. That was the barbell approach to investing. Now you want to put some plates on that barbell. I think from 𝗬𝗢𝗓, these are at least some good picks that you can look at. The larger the market cap in terms of the coin, the less upside potential, but probably the more stability the coin has. So you got 𝗖𝗢𝗓𝗔𝗕𝗍 right at the top over there. And if you ever thought that 𝗕𝗏𝗏coin was vaporware, well, not according to this, a $2 billion market cap. 𝗕𝗏𝗏coin is another one to look at. Turbo, interestingly enough, was one that we have already got into a very, very long time ago, because Turbo was launched by ChatGPT. So it kind of falls under the same sector. Of course, a human was prompting ChatGPT way back when, but said, create this meme coin with me. You called it Turbo. Things go, a common phrase on crypto Twitter in the parabolic phase of the crypto market is run a turbo, right? We're going to run a turbo means it's going to pump massively towards the upside. So they called it Turbo, create the image. It did everything, launched the contract, created the supply of the coins. $688 million market cap. I do hold Turbo. I have for a long time. So I think that's a good one. You got 𝗖𝗢𝗓𝗓𝗏𝗏t, also decent. We have GOAT. I would say another blue chip that you can look at is GOATius Maximus, AVA. This is going down in terms of market cap, right? 𝗬𝗏 is another one to look at over there. Let's just go through the list over here. And then these are much lower caps, right? I don't even know this one. Sploot, 7 million. Haven't ever heard of it. So these are some of the coins that you can be looking at. But what I would say is also be careful, guys. There's a lot of bots out there in terms of as a technology. And a lot of the bots are just rebranding. And they're now calling it an AI agent, fooling people. A lot of these things are not AI agents. It's absolute vaporware. But, if speculators will be speculators, there will always be an opportunity to make money over there. So you can keep an eye out on some of those, right? Let's see if there's anything else noteworthy to look at. Let's actually have a look at Turbo, since that was one that I just spoke about. And I haven't looked at Turbo for quite some time, despite holding it. How's it doing? Okay. So Turbo is still holding up, right? Still holding up. So although it feels like memes are mostly dead, and the narrative has been stolen by AI agents, it's not really. It's just been range bound, just bouncing around over here between 0.078 and on the top side 0.014. So you got this big trading range over there. There is almost 75% trading range between top and bottom. And yeah, it's just popping about, chopping around over there. Let's see how MOG's doing. Also, Mog's not doing too bad. Another one that's one of our top picks as well is Giga. And if I'm not mistaken, Giga is, there it is, all-time high, right? So you'd swear that meme coins died, but Giga Chat is trading right there, basically at all-time high. So we continue to remain heavy in terms of our picks within the AI sector, within the meme coin sector, and we are getting a bit of AI exposure as well if there is good dips that present themselves. I've said for a long time, I believe meme coins and AI will be the top contenders for this bull run, followed by layer 2s, and then possibly a few of the real world assets will do very, very well, right? So Brett's still looking for this move all the way to the top side. It's come back down into mid-range, held that level. It's rejecting right now from range quarterly, so you might see Brett come back down to just under 13 cents. Watch for the high low over there, and then we can reevaluate. Yeah, let's have a look at WIF. I see in the comments you guys have a question around WIF. We can have a look at WIF. How is it doing? Okay, it's not looking good, bruv. So WIF it was holding this parallel channel over there, got absolutely rinsed. Okay, let's just clean some of this up. So that is WIF. I would have to treat this as a range-bound environment, which means, this is your range low. So I wouldn't be surprised to see WIF come back down into 150, right? Maybe you sweep that one more time before it runs. Big bull trap over here. Anyone that bought there got rinsed. Maybe you see something like that, sweep that level, form the next high low, and then only when risk returns in a big way, maybe that's when that occurs, later on the end of January, beginning of Feb, where the Fed pivot into QE. We'll see. Only time will tell, right? Only time will tell. If you do want to trade these coins, by the way, guys, there is a major opportunity over here on CoinW. They have Mission X running right now, right? So it's a trading challenge over there. You can win your share of 30 Bitcoin, 30 BTC. You got about another 8 days left to win this event, right? Or at least to participate. If you rank decently in the competition, you automatically get your share of 30 BTC. So there's a link below. With that as well, you do get a sign-up bonus, right? If you use the CoinW link below, you get a specific banter sign-up bonus. And then again, if any of you do want to jump into Whale Room, remember, it's not just me. There are a whole lot of different traders over there. You got Josh, you got Farouk, and you got Chris as well, constantly dropping trades. So here you can see this morning's trade, of course, from Farouk, 10-11% up over there on Get Grass, right? So that's it from me, folks. I'll see all of you on the next one. I hope you have an absolutely stellar, lovely day wherever you are in the world. And I'll catch you all tomorrow. Let's see if the volume does come up or not. I'll see you all then and have a great day. Cheers for now.